So the next panel discussion here, as part of the UAE Growth and Investment Forum, we're looking at the UAE's competitive advantage. What makes corporate tax so competitive in the UAE? Joining us on stage are our panellists, Nirav Shah, the Director of Fame Advisory, Jason Mandapathal, the Manager of Compliance and Assurance at Hussain Al Shemzi Chartered Accountants, Nandaraja Shetty, the Deputy General Manager of the UAE Tally Solutions, and Sheetal Soni, the Partner for MICS International DMCC. Can we get a round of applause for our panellists here this morning? Great to have everyone here. Nandaraja, going to you first up. In your opinion, why did the UAE decide to implement a corporate tax at 9%? And how does this align with the broader economic strategy for the country?
I think with the business advantage, or let's say what we the competitive advantage what we have in this country to start a business or to operate a business, it has to be something which is attractive, even though we have a compliance landscape in place. Keeping that in mind, the government is well in place to put the compliance as well as the business advantage together to ensure people invest more and more here. And it attracts the investment from outside as well.
So it's all encompassing, looking towards that. Nirav, do you have any thoughts on the impact, or how do you foresee the tax rate on the UAE's economic growth? So when it comes to foreign investment or even FDIs and retaining global companies, there's been a lot of businesses, multinationals that have been based in the UAE. Do you see an impact on the new tax rate retaining global companies?
In fact, having the corporate tax has improved the visibility and attractiveness of the UAE far better. And having a rate at 9%, which is among the lowest in the world, is in fact proving to be a better place to work at as even compared to a Singapore or Hong Kong.
Because that seems counterintuitive, that if you introduce a tax rate...
That's right. So now you are a compliant economy. You're no longer considered a tax haven and things like that. Believe me, since last year, we have seen more and more interest of the people to come and set up here. Why? Because we have a 9% tax rate. So I would see it other way around, that from an FDI perspective, it is in fact better. That now we are no longer considered at par with a BVI, a Cayman, a Jersey kind of location. But we are a trade and service jurisdiction which has geographical location as the biggest advantage, and therefore if we leverage all these things together, we can make a compelling case for having businesses here.
So Nirav, it really becomes the last piece of the puzzle, because you've got all these attractive options between the region and where we are, and suddenly it becomes down to, for multinationals, the CSR, the corporate social responsibility. You don't want to be seen as a tax haven, but secondly, it then allows, well, ensures from the government perspective, businesses have to be far more thorough with their account keeping methods.
So that's the onus on the businesses here.
Yeah.
What is the challenge today? The challenge is not about embracing 9% or compliance. The challenge is what Pratik is going to discuss next in the next session, that you need to have your robust compliances. You need to have your robust accounting. That's where the product like Tally and others will help you, but your internal discipline of maintaining proper books, following IFRS to the T, making sure that you are complying with all of that, tax is only an outcome. If you can follow the accounting properly, if you can put your discipline in place and have your allowable deductions being availed, you will automatically optimize your taxes. You don't have to worry about it. But for that, you have to be aware and you have to have that accounting discipline ingrained in your system to make sure that the outcome is correct. The problem that we are facing today is that for far too many years, the businesses here never had any compliances. Therefore, they operated in a free environment, so to say. And they made whatever adjustment in the books that they wanted. Now you can't do that. And therefore, that's where the conscious shift in the mindset has to come in. What is the framework of the law? And can I operate within that framework and have my proper accounting, bookkeeping done in a manner that I'm going to get more and more compliant, and I'm going to get more and more benefit out of all that.
Moving on to you, Jason, you're a manager of compliance. So picking you up on that idea about compliance, looking at a lot of businesses, they're having to obviously work with the 9% corporate tax rate, but how does that compare to other countries within the GCC?
I think right from the beginning of the forum, we've been reiterating a single point where the 9% tax is one of the lowest in the regions. And I think that speaks out for itself, because when we compare across with other developed or developing nations, we take in Singapore, we take Malaysia, we take India, we have all the infrastructure facilities being put in at the same time with a high tax rate taken out. Comparing the facilities we have here, comparing the infrastructure this country is providing to all the people here, to all the businesses here, to the lifestyle that is being pushed out over here. I mean, 9% seems like peanuts, and it's more of giving back to the community that has helped us grow at the same time. I think that speaks about the tax rate or the intent in this entire region.
Yeah, it's much like what we touched on, that sort of social responsibility. But what do you think are some of the biggest challenges that businesses are facing in terms of compliance with the new regulation?
The advent of tax in the UAE has raised UAE in line with one of the global financial hubs. And like Nirav sir just mentioned some time back, where it's no longer considered a tax haven where people can with confidence come and start their businesses in UAE and gain top recognition. What comes along with starting a business is the discipline that we have to maintain, is the compliance that we have to focus on, because starting something and then keeping it disciplined and carrying it forward is what matters the most. And also, like our previous presenter mentioned, you either catch up on the regulatory compliances that you have to place with respect to keeping your books of accounts or comping your taxes, declaring information to the government, and if you think you lack at it, try to hire your dragon slayer and then let them take care of it for you.
Yeah, I think we might have a few dragon mentions across the day. There's going to be some impact, I think, from that last session. Thank you very much, Jason. Chantal, when it comes to a lot of businesses, in your experience, what are some of the changes that businesses have had to make internally with their structure, given that they now may have a 9% corporate tax to work with?
As far as the businesses are concerned, I mean, when the tax law came in, it was 60 pages. It has evolved to around 2,000 odd pages now. I would make two contradictory statements. One is free zone is not free from tax, and the second one is devil is in the detail. Free zone you can potentially get a lot of exemptions. If you are smart enough, you can make the benefit of extra 2,000 pages that is added to the tax law. You know, the devil is in the detail, as I said. As far as the businesses are concerned, they certainly have to, a lot of giveaways are there in the tax law and the clarifications that are there. And smart businesses can navigate those details, within those details, and to avail, a lot of tax benefits as provided by the UAE tax authorities. One of the like say for example, if you are a startup founder, and if you start a startup here and sell the startup, say start a startup, invest $1 million, and say after a few years you sell the startup for $100 million, inshallah, you don't pay taxes in UAE because the taxes are not on individuals, right? The taxes are on companies. So there are, similar to this, there are many other benefits as gamified by our tax dragon expert today. A lot of benefits, giveaways also are there to the free zone authorities, to small businesses, some reliefs, group provisions and all, which gives, which is first to be aware of these, and the second to make most out of this for small.
Well, you mentioned that obviously free zones aren't specifically tax-free, even though there are incentives. What are some of the exemptions or special considerations that startups might have available to them? So
as far as startups are concerned, the first and foremost benefit is small business relief. If your revenue is less than 3 million, you don't need to pay any taxes. And this relief is for next 2-3 years until 2026. The second benefit that you have as a startup is that you can carry forward your losses. Startups does not get into the profits from the year one. So you can carry forward your losses unlimited period as for the tax law, which is not there in most of the countries, does not give that unlimited period of tax losses carry forward. The third thing is that if you are operating through free zones, if you are one of those activities which is qualifying activities in a qualifying free zone, you get the benefits. A lot of these, startups may fall within those categories as well. And startup founders, as I just mentioned, they don't pay taxes if they make money out of selling those startups. So as far as startups is concerned, there are a number of these giveaways as well.
I can see that, Nirav, you want to add a comment to that?
2-3 things. If you take SBR, you can't carry forward the losses. So you need to be careful what you choose. So if you take the small business relief,
yeah, if you take the small business, you cannot carry forward.
You can't carry forward the losses. So you have to be careful in what you choose. Secondly, and more importantly, the dividend and capital gains, even if it is earned at the corporate level, subject to conditions, you can still get that exempt.
Okay, so the capital gains tax.
That's right. So whether you own the startup through individual capacity, which is anyway tax free, but even if you have a holding company and you own that and you sell that off, the holding company can still get the capital gains exemption. So that's I just wanted to kind of supplement what Steve.
Nanda Raja, I want to know about your experience with Tally accounting software. How does this specifically help businesses enhance efficiency when it comes down to their accounts?
Okay, now just put a perspective in place. Now, when we implemented VAT for the first time, that is something I think one of the largest compliance which we got implemented in this country for a long time. There's a lot of confusions on how this is going to impact my books of account or how I do generate invoice on the day one, because that's how the small businesses, because they don't spend much on a skill set or let's say mindset. They go with the flow. Especially in the SMEs, with the new corporate tax coming in, what they have to spend primarily not on the software, in the disciplining their account. That is what Nirav sir said about restructure yourself or take a step back and relook at your books of account and ensure the classification of accounts are in place. Now then comes the software in place. Now what software does is whatever the discipline you brought into your organization, the software will take care of the further things like how you can get the data in place at the time of requirement. Now, the time of requirement basically could be an audit, it could be a CT filing. So you need data in place. That is where we come into place.
Yeah.
But however, the tax planning, which is most important at this point of time for even the smallest. The larger companies already started way back and they advanced. But the smallers, now they're catching up, but it is time to actually put effort on tax planning and reorganizing themselves.
Jason, I want to ask, and I'll ask you first, and we might open this up to the rest of the panel. Given the impact of the 9% corporate tax, the UAE has a challenge, the way every economy in every country has a challenge. How do you ensure transparency to avoid potential loopholes when you implement a new tax like this?
Of course, it's basic human nature whenever we are put out with a challenge or whenever we are put out with a tax rate. Humans get very creative and we try to find ways, how to either normalize it or how to restructure it, and there's a very fine line between how to evade it. When we talk about compliance, when we talk about sticking in with the details or staying in compliance and try not to abuse these loopholes, one of the major article or major provision that is added into the law is the anti-abuse rule, is the general anti-abuse rule, wherein the FTA, the authority, is given the power wherein they can identify if any transaction or any arrangement that has been entered into has a tax abuse element into it, wherein it is purely entered into not just for any valid commercial reason, but only for the purpose of gaining an undue tax advantage. So having such checks or provisions in place on ad hoc basis, they can pick it up, they can assess and identify whether you're within the laws, within the walls of the law, or whether you're still within the laws of the law but abusing it or not. So keeping that in mind, what some of the first thing that people must take care of is make sure they have enough resources in their businesses first to capture data, to record data in
that they have the right
manner.
Software. That's what they
exactly,
need. Yes,
which you have to bring into the accounting side of it. Second side of it, where I think in the previous sessions we had people from the legal side of it, wherein any such complex transactions or arrangement that they are planning into can be spoken out, can be checked within the details of the law and see whether they're complying or they're crossing the fine line. Definitely what they can do at the end of the day, if nobody has an answer, is even write up to the FTA directly to get a clarification from them, or even enter into an advance pricing agreement with the FTA and tell that I'm going to do so and so transaction, I'm going to do so and so arrangement. Is this okay? Is my pricing fine? And get an opinion from the authority straight away, which will be binding between the authority and the company on its own. So given place such checks or such facilities within the law ensures that there is not compliance coming only from one direction, but as responsible companies, we have to respond back in the same way.
Sheetal, any experience, well, your thoughts on your experience about how the UAE can ensure to be much more transparent to avoid potential loopholes?
Awareness. I think this is one of the things that FTA has been doing exceptional job in terms of conducting seminars themselves. So I've seen at least 10 to 15 such sessions that has been done during last several months. FTA has been releasing a lot of clarification documents pertaining, supplementing the law. So that is also, clarifying lot of provisions that related to that. And the last, one of the most effective thing that UAE always does is penalties. So a lot of hefty penalties are also there in the law. If you don't listen to them, if you don't, read the material which they are producing, and then there are certainly a lot of penalties.
And you have to give credit to the government, the awareness campaign, like you said. A lot of countries do introduce laws and schemes, and it's hidden in the detail. But I think the UAE's, as you said, a two-way street. I think, Jason, you touched on that. The idea of the UAE's being completely transparent about the introduction and also the penalties, and that's ensured a much better relationship. Nirav, you probably got some thoughts on this question as well? Or?
I can supplement a few things. See, we must understand and appreciate that we are in an environment where the laws are implemented with not a very heavy compliance burden. We have seen that with VAT. Somebody who is used to it can file the VAT return within a 10-minute window. Similar things will happen also with corporate tax. FTA is not after you to harass. FTA is here to make sure there is a framework where majority of the participants comply, and of course they'll pick up those who are not complying. So transparency is something which they want you to imbibe in, because the onus under the law of providing the correct information is on you. They trust you. So they're placing the trust in you. And if you do something wrong, they'll catch you. But if they catch you, then of course the penalties are very high. So of course you need to start that journey and take steps to make sure that you have right documentation, you have right agreements, you have right software, you have right data in place for you to do the correct compliance.
And there's no doubt that the compliance, there'll be changes within the tax regulations. Nandaraja, with your work with Tally, what are some of those tools, what are some of those functions that you have to simplify all of the reporting to help a business stay updated with the constant evolution of the tax status?
Yeah, as I mentioned, during VAT, what we come up, we are not changed anything even after 5 years. That is the first version of VAT which we introduced, and that is still we are carrying on. Now, when it comes to CT, again, it's very deeper and the subject is very wider. Yesterday I was attending a workshop there. One of the speakers was mentioning about any transaction you pass, it will be an impact on a P&L either plus 9% or minus 9%. Now sitting and in a user, he will not be deciding whether it's a corporate tax, whether it's an exempt, whether it is we have to enter as per the regulations. It's not. The system has to take care. Now for corporate tax, the starting point is the income statement. That is where an accounting software comes into picture. As I previously mentioned, if your account is structured in such a way that to get the reports in a place where the auditors, internal maybe or external, they get an income statement which is complying with your IT requirement or the CT requirements, that is where the step one begins. We are working on certain external tool which can be plugged into our current software, which can import your income statement. At least you can slice and dice the data as per the guidelines which is required. That is what we're working on. We are not jumping into a written format as of now. It is far to go. Yeah. But as of now, this is what is available for the users.
Thank you very much. Sheetal, I want to touch more on the pricing audit. Like you said, when you're doing the pays, certain employees might be coming out from different countries to work here for certain periods of time. Businesses with a multinational might be hard to ascertain, well, where are the profits? Have they been made here? Or were the profits made back in the home country, given certain employees are coming here? Has that been one of the biggest challenges in trying for businesses to try and with their compliance, that maybe they have different offices and a network of different employees that might work around different countries and have different tax systems?
Not only international jurisdictions where the tax rates are different and the fight can be between two tax authorities whose money is this, whose profit is this, and then based on that whose tax revenue is this. It can also be within UAE as well. You know, I mean, say if a company within the UAE, a group company is in the tax-free zone, I mean, can get a tax benefit of 0%, and the another taking the services in is taxable. Particularly transfer pricing, you know, there is a detailed guideline also that is published by UAE authorities, the tax law as well on the transfer pricing bit. This needs to be complied with. This gets into very complex zone. In simple terms, it's an arm's length. One has to always make sure that the transaction, even between your related companies, are at the arm's length basis. If you might have a view of the arm's length as a business, but then you need to comply with the guidelines of the transfer pricing as well, which may not agree with what the business might be thinking of at as arm's length. So you need to go to your tax consultant in order to make sure that you create the right documents pertaining to where you should book the relevant profits to.
Well, so without then going into that topic, Jason, what's the relationship that the UAE government has with other countries? Because there could be situations where, as we all know, if you're employed in the UAE and then you're not paying, income tax, but you might be sent to go work to another country where that business would have to pay a payroll tax for the employee's wages, and therefore there might be a blurred line of, they're there 5 months of the year, that's infringing on the line of a payroll tax. And that. What is the relationship that the UAE has with other countries?
Right. So before I get into that question directly, what I would love to supplement is...
No, please.
It's in the details when we speak about how you're documenting or what is the agreement, what are the details of the agreements you're getting into, what service are we providing, how is it going to be conducted, who is taking the control of it or who's directing all of these. Taking into picture all of these aspects of the agreement, seeing each points of it, and then taking a call whether we can pinpoint which area does this pertain to. And then if that isn't happening, we move on to a little broader perspective. Something that we have to include while judging whether this falls part of this or not is the double taxation agreements, which the UAE government has entered into, I believe, 140 plus. I'm not sure about the exact count, but 140 plus you could say as of now. They've entered into double taxation agreements with all of these countries. There are specific points that address such scenarios where it comes to providing technical services, where it comes into place of a royalty income. Such minute points are being covered there, or guidelines are being provided by the DTAs to the corporate tax law here. So wherever there is an ambiguity, we fall back and refer to the agreement with the country and see, okay, who has the right over this, or how are we going to split it between them if applicable. So from the initiatives or from the side of the UAE government over here, there continues effort in forming agreements with other countries, forming treaties, forming tax exchange or tax information exchange agreements with all of these countries is commendable, I would say.
Yeah, I think so. It's always going to be something that evolves. Nirav, leaving the UAE out, we know that the UAE has always been, and as we've spoken about so much today, a hub and an attractive destination. More further to the idea of the UAE's reputation. And I want to touch on that because what impact has it directly had? Because we mentioned about the CSR, we mentioned that suddenly it's no longer a tax haven. Has that purely been positive, or has the impact, still had some pushback or some feedback from certain jurisdictions?
There will always be a two side of the coin, whether you want to look at the bright side or not. UAE was a hub to a lot of businesses which flourished because there were no taxes or no compliances for that matter, right? So they all will get impacted, and they all might decide to then move out, because then that's not the place for them to continue to operate that way, right? So you will have some impact on some of those as well, but also in my view, the balance is still on the more positive side, where it has given a positive impact and twist to the entire reputation and perception of UAE.
Yeah.
And that's where, Sheetal, you want to add something?
Sheetal, yes?
So I'll just add that, I used to work for Kizad 15 years back. Right, and when we launched Kizad, theme of attracting investments in the free zone was on 3 major factors, and those were very simple factors: ease of doing business, low utility cost, and global connectivity. So UAE has always offered these 3. One of the factor which kind of overplayed in the mind of institutional investors globally was there is no compliances in UAE. And I think that became such an important factor. And this add-on, which is bringing tax reforms, bringing ESR reforms, VAT, corporate tax, is certainly an icing on the cake. The big institutional money will certainly come to you, and we are already seeing it. For smart peoples, you always get tax benefits, which is from the details. I would say it's UAE you already have a car, right? You had everything in the car, excellent, features. You just added a sunroof and a sports package in the
There's
car.
There's a few extras. So the icing on the cake.
Yeah, this is the icing on the cake. Yeah.
Just
Jason,
a very
yes?
small statement with respect to this itself is where compliance is coming to picture, more of the legit ones still stick around because given the infrastructure, given the benefits provided, far more beneficial than the tax rate that they're going to pay. And those that are not legit, or those that they still think that they want to operate from a country where compliances are not there, obviously the downside would be they would have to take an exit of it, or they will have to take a reform on it. But nonetheless, standardizing, fitting into the society and sticking with legit business is what we are trying to move forward with.
I can see Nirav wants to add something.
When you speak to large ultra high net worth families or large family offices and large multinationals, earlier they were frowning upon UAE because there were no compliances. Now they are looking at it much more positively.
Mm-hmm.
With the infrastructure, with the safety, a lot of families are moving in here, making this a new base for themselves to be here and doing business. So that has given a very, very positive outlook to the entire, perception enhancement that we would say from a UAE perspective. And that has been very, very beneficial overall.
Nandaraja, in your thoughts, how will the new corporate tax rate, how does it help the country diversify beyond oil and gas, in your thoughts?
This is, I think, 5th year where the tax reform started in this country. The first initial investment of 2018 was around 20 billion from tax. I think they crossed in the first year itself. Mm-hmm. There was one testimony for this. More than, I think, diversification, I believe it's about standardizing the business practice in this country, which stay at par with the other countries in the world. To attract, let's say, businesses to operate in this country. That I would say in that way.
Anyone else got thoughts on how the corporate tax rate is going to help diversify beyond oil and gas?
So like I mentioned that we are now attracting a lot more financial services player, right, from Singapore to London to Switzerland. They are all moving.
The professional services are coming, yes.
Professional services companies are moving here. So it is only helping us to further diversify away from the oil reliance. I mean, we should not be saying that because we're already not heavily dependent on oil as a country. We're already 50% diversified. But this will help us to further kind of diversify more because now we are able to attract the previous capital which we were not able to attract so far. And with the tax, that will happen.
Okay.
So that's the game changer that I would say.
I'll say that when I started my career, my chairman had a very unique style of talking to few people in the meeting room. He'll look at you while he is giving a message to him. That's what I can think of as far as UAE is concerned. They are, implementing these laws in order to add that added benefit of compliances and making sure that the economy is perceived in a way which is good for institutional capital as well. While at the same time, they will get the 9%, right? Only UAE can think of single-digit tax rate. I mean, if you would have asked an accountant, he would have said, put the tax percent, 10% tax rate. But I can think of leadership who has thought, no, let's make 9%, right? Let it be single-digit. I think in terms of numbers, around $13 billion are expected out of first year itself, which is around 15% of non-oil GDP. So it will certainly add value, and we will see more relative value of this when the oil prices might drop. And it is very cyclical, the commodity prices are very cyclical, so there will be times when oil prices will drop and this will come quite handy, but this is not what currently the theme or the objectives of the government, it seems.
Can we see the tax rate in the future increase? Or do you believe the 9% rate will remain stable for the foreseeable future?
Generally, the stance that UAE has taken is to have consistent policies and not having variations from time to time or year to year. We saw VAT came in at 5% in 2018. KSA also brought in at the same time. Moment the COVID hit, they went up to 15%. Bahrain went up to 10%. UAE didn't touch the rate, they kept it same. So we do believe that with similar thinking, we expect the rate to remain stable at 9. But of course, for multinationals, it will go up to 15 next year for that specific provision, but not for everybody else. So we do believe it will remain stable.
Anyone else agree or disagree with that comment, Jason?
I think nobody can more or less agree with Nirav sir here itself. What he's spoken is true itself, because when we see with respect to the intentions of the government here, and with respect to all the communications that we have received so far, there is no intention as such to amp up the rates at a later stage. They want to stay consistent, they want to provide the best at the most efficient manner as possible, attract investments at the same time, more or less provide back to them. So keeping this in mind, and also when it comes to the question of would they be introducing personal income taxes over here, we've had their intentions, we've had their speeches or their intentions being communicated out, where that is not the goal of UAE as a country to start taxing their personal incomes over here. Keeping that in mind, I believe we can stay confident in the government with respect to this factor here. And
I fully agree with you. Before this question, whether 9% will increase or not, I think one question will certainly come, which is when is personal income tax
Okay,
coming?
so that's the better question.
Yes, I think the personal income tax will come before the 9% gets further, and for that, oil prices needs to really be beaten up in order to increase these tax rates.
Well, looking into the crystal ball, any idea when it may happen, or it's just a relying on the oil price?
Just leave it for the time being. Nobody can predict oil prices.
Well, we do thank you for your time and also your honesty and your candour with this topic. We've been discussing the UAE's competitive advantage with corporate tax. We'd have Nandaraja Shetty, the Deputy General Manager from the UAE for Tally Solutions, Nirav Shah, the Director of FAME Advisory, Jason Mandapathal, the Manager of Compliance and Assurance from Hussain Al Shemzi Chartered Accountants, and Chital Soni, the Partner for MICS International DMCC. Could we give them a round of applause for their comments?